The $1.1 billion shakeout. Why Bitcoin's drop is actually bullish. The hook. When panic selling creates millionaires. March 2025. The purge that cleared the path. Bitcoin just crashed below $108,000. 1.1 billion in leveraged positions evaporated in minutes. Crypto Twitter is screaming, bear market. Mainstream media is dusting off their Bitcoin is dead templates for the 473rd time. But here's what they're missing. This is the healthiest thing that could have happened. Think of it as financial forest fire management. Those $1.1 billion in liquidations, that was over-leveraged gamblers getting flushed out. 50x, 100x leveraged traders betting their rent money on perpetual pumps just got a brutal reality check. The weak hands are gone. The speculators are liquidated. The market just took out the trash. And now, the real buyers step in. Institutional investors who've been waiting for exactly this kind of correction. Whales who accumulate during fear. Long-term holders who see 108K Bitcoin not as a crash, but as a discount from 120K highs. History repeats, every major Bitcoin bull run has had 20 to 30% corrections that liquidated billions. 2017 dropped 40% mid-rally before hitting 20K. 2021, 5 separate 30% plus crashes on the way to 69K. This 1.1B liquidation isn't the end of the bull market. It's the cleanup that makes the next leg up possible. The hidden opportunity. Why smart money is celebrating. The liquidation cascade. A blessing in disguise. When $1.1 billion gets wiped out, it's not wealth destruction, it's wealth redistribution. Here's what actually happened. Over-leveraged traders betting with borrowed money got margin called. Their forced selling created a temporary price dip that smart investors had been praying for. 3 reasons this is massively bullish. Leverage. Reset. Before the crash, funding rates were at dangerous highs, a sign of excessive speculation. Now, leverage is flushed. The market is healthier. Future rallies will be built on spot buying, not leveraged gambling. Institutional accumulation window, MicroStrategy, BlackRock's ETF, Fidelity. They don't buy at all-time highs. They accumulate during fear. Sub 108K Bitcoin just opened a buying window for billions in institutional capital waiting on the sidelines. Technical strength, Bitcoin held critical support at 106K. It didn't cascade to 90K or 80K like bears predicted. The bounce back was swift and aggressive, a sign that genuine demand exists at these levels. The data backs this up. On-chain metrics show long-term holders didn't sell. Only short-term speculators and leveraged positions got shaken out. The supply in strong hands actually increased during the dip. The technical setup. The perfect storm for 150K plus. What the charts are screaming, but bears refuse to hear. Professional traders aren't panicking. They're positioning. Here's what technical analysis reveals about this dip. The Fibonacci retracement. Bitcoin's pullback to 106K, 108K represents a textbook 0.382 Fibonacci retracement from the recent rally. Historically, bull markets respect this level and use it as a launchpad. 2017 had 3 similar retracements before 20K. 2021 had 5 before 69K. RSI reset. The relative strength index was flashing overbought at 120K. This correction cooled it down to neutral territory, exactly where sustainable rallies begin. Not oversold, which would signal capitulation, but balanced, which signals healthy consolidation. Volume profile. The liquidation created massive volume at 108K, establishing a new support zone with real liquidity. This isn't a weak bounce, it's a foundation. The catalysts ahead. April 2025, Bitcoin halving anniversary cycle historically pumps 6 to 8 months post-event. We're entering the sweet spot. Q2 2025, altcoin ETF flows, 4.7B already, create rising tide for entire crypto market. Bitcoin remains the gateway drug. Macro backdrop, Fed rate cuts expected Q2 to Q3, weaker dollar indicates stronger Bitcoin. Institutional adoption accelerating faster than any previous cycle. Target range by EOY 2025. 150K, 180K isn't hopium. It's math based on historical post-correction rallies and new capital inflows. The millionaire maker moment. Fortune favors the bold. Why this dip will be remembered as the opportunity of 2025. Years from now, investors will look back at March 2025 and kick themselves for not buying Bitcoin at 106K, just like they regret not buying at 3K in 2020, 30K in 2021, or 15K in 2022. The pattern is crystal clear. Bitcoin doesn't move in straight lines. It climbs stairs and takes elevator drops that shake out the weak. This 1.1 billion liquidation was on to crash. It was a clearance sale for those paying attention. Here's what separates winners from whiners. Winners see discount prices, reduced leverage, institutional buying opportunity, technical support holding, macro tailwinds strengthening. Whiners see red candles, scary headlines, Twitter panic, I told you so from gold bugs who've been wrong since 2009. The next 6-9 months will separate generational wealth builders from regretful spectators. Every bull market has moments like this. Every time the crowd panics. Every time the smart money accumulates. Every time those who bought the fear are rewarded handsomely. Bitcoin at 108K isn't expensive. It's on sale. In a world of infinite fiat printing, government debt spirals, and institutional adoption accelerating, the question isn't if. Bitcoin reaches 150K plus. It's how fast. The revolution isn't canceled. It's just shaking off the tourists. WAGMI, we're all gonna make it. Bitcoin liquidation, $1.1 billion weak hands eliminated. Institutional buying window. Open bull market status. Intact your opportunity. Now, the best time to buy Bitcoin was yesterday. The second best time is today at 108K.